Tariffs are now in effect, especially for China, and we'll see what is going to happen for Mexico and China in the next 30 days. But the investments that you had in 2024 and 2023 may no longer be profitable due to inflation. That is now the biggest risk that we should be concerned about. But here's the thing. Why are those investments no longer as viable, perhaps? And perhaps more importantly, what are the things that you should have in your back pocket if this is going to be the case? Let's go ahead and break it down. Let's first talk about what is on the board and what you should have on your radar, all right? It is always important to be prepared. Stay ready so you ain't got to get ready. It has always been my philosophy, and it should absolutely be yours in a time like this, because you don't want to be in panic mode. How do you avoid being in panic mode? Being prepared. So this is your preparation video. If you start to see inflation creep up, which we have seen with eggs for a different reason, you are going to have these stocks and other investments. These aren't just all stocks. You're going to have a place to go to and say, hey, let me go back to this video, let me go back to these stocks and invest in these things. So you are going to be ready. So first, let's talk about 2024 and 2023. The investments that we had back then, mostly AI stocks, mostly tech stocks, and things of that nature. Remember this, the stock market is about expectations and what we see and what we saw at that time. Inflation was going down, perhaps not as fast as we wanted, but inflation was going down. And when that does happen, companies hire more, we saw interest rates start to get cut, and the stock market and the economy is excited. Also remember that unemployment was down too. As these companies were expanding, we were, again, hiring more, and we started to buy up tech stocks. Well, if these things start to reverse, things are going to do what? Contract. People are expected to spend less, and they're not going to spend a whole bunch of money on, let's say, cruise stocks like Royal Caribbean, which had done well and is continuing to do well, at least at this point in time, when I look at the last 6 months and over the last year. If, keyword, if inflation is going to take off, and that is a big if, again, we are planning for the future. If this is the emergency plan, then we're going to have to shift our focus. So I picked out perhaps 6 areas that you do want to consider. One of these is you should always have this, but you do want to come back and really hone in on this particular area. So now you know why things may shift, and now you need to know where you may need to shift these things. The first one is a high yield savings account. You always want to have this as your base level, all right? The reason is you always want to have, well, first off, emergency savings you want to have anyway, all right? You want to have some cash just moving and grooving for you, right? And that's because you got other things you want to buy. Obviously, an emergency can happen at any time, so you want something to pull from. Usually, you want your investments to continue growing for you, and you don't want to have to pay a tax penalty or an early withdrawal penalty or fee, so the cash should be the first place that you go. Now, I do have a link for M1 Finance. They have what is called a cash account, and they pay some interest on that. You can check out the link below if you choose, and I believe there's a boost too, so you can get perhaps an extra, percentage on that. So check out the link, read the stuff below, and you could do that. All right, so that's one option for you to just have some cash at the ready to take advantage of any investments that you do like, but also just to have that additional cushion. That's one. It's the easiest place to go. Next, remember I-bonds? Remember people were talking about that? Was it 3 years ago now? Inflation protected bonds. Those are bonds that are adjusted for inflation. That could come back around. Now remember, for those that don't know, why can tariffs impact inflation? I did a whole video on that. You can check out that video here. I'm not going to go back and explain it. I will say this, a tariff is essentially an indirect tax on you. Go back and watch that video. I explain the entire thing and how it all works. But if that's the case, the cost of stuff is going to go up. The cost of stuff is going to go up. Your spending behavior is likely to change. And if that's the case, then, things in the economy are going to change depending on how wide the tariffs are going to be at the end of the day and who the tariffs are going to impact. Right now, today, I believe it's a 10% tariff on China. There was a pause, a pause. I'm gonna say a temporary stay, which is the same thing as a pause. But there's a 30-day, I guess it's 28 days at the time I'm doing this video, but 30-day pause for Canada and Mexico. just 30 days. So we don't know. It's a 4-year run for the president. So we don't know how long that's going to remain. But we'll see where that's going to go. But you've got a savings account, you've got inflation protected bonds. And here's where things start to get a lot more interesting. Then you've got what we call consumer staple stocks. These are the places where you absolutely have to buy stuff. Now, Walmart is one of those. I've talked about Walmart a bunch of times. And I'm just throwing out different types of stocks. I'm not doing deep dive analysis of these, but I do have several videos on stocks that are good. I'm talking about Walmart a bunch of times. Costco is another one of those stocks that could fit in this category as well. You have to buy these things regardless of how much they cost. Toilet paper, tissue, groceries, all that type of stuff. Think of places like this. I'm not sure if I'm a fan of Kroger, the stock. So I would need to look into that one. That's not, it ain't on my watch list. It's not a stock I currently own. So don't hold me to that one, but something like that. Those are the places that I would look if I start to see inflation take off and I start to see it creeping up. So that's the place I would definitely pay attention to. Also start to move towards value stocks. So now we're moving to number 4 on the list. What are value stocks? Now, the definition of value stocks can really depend on who you talk to. It's not just price. When you talk about value, it's not, a stock that is under a certain dollar amount. It's really how much are you paying for it, and truly is it underpriced based on what the balance sheet looks like. How much money does a company have? How much is a company truly growing? So again, I'm not doing a deep dive analysis in this particular video. I'm just throwing out names to you and you can do a deeper dive, or if you want, you can just put the name in the comments and we could do a deeper dive on that. That helps me and helps you. All right, so that's up to you. But a company perhaps like a Bank of America, I would argue that Morgan Stanley might be one. I think it's understated and could definitely be at a value based on where it is right now. Those two, maybe, depending on how you want to consider what value is. Again, that one's kind of a nebulous, it's kind of squishy definition of what value is, but those could be. The reason why value stocks come up is because when inflation starts to take off and people start to get skittish, they look for things that are underpriced and stocks that could be what people consider overvalued. Some consider Nvidia, maybe, and say, look, Nvidia, is it really $3 trillion in value? That's crazy. We're going to go ahead and start selling and taking our profits. I want to look for the companies that really make sense, the ones that people aren't looking for, and start digging around to find the stocks like the Morgan Stanleys, maybe like the Bank of Americas, all right? That is what they start to do, and then those are the ones that do well long term. These aren't companies that are really nice and sexy names right now, but those are the ones that people tend to look for when inflation starts to take off and when the stock market is volatile, which right now, and it's very early in the year, it seems to be that. We'll see where things go. But again, this is one of those back pocket things. Hey, if things get crazy, this is where I'm going to go. So you have some options. Next, you want to also pay attention to medical. Now notice what I just said. I did not say healthcare. I said medical. I am using my words very carefully here because you can argue that it's semantics and there's no true difference. I'm trying to draw a line here and be very careful because I'm preferring to choose medical devices, hardware. A company like Intuitive Surgical, they make equipment, not necessarily drug makers. I think it was RFK Jr. who, he's not confirmed yet for Health and Human Services, but he has a very interesting stance on, I'm not going to get into it. He feels a certain way about certain things. Again, I'm not going to get into it. But companies like Pfizer, like Moderna and others, those stocks have not reacted well to the things that he have said, and should he be confirmed, I'm very skittish on how those stocks will do. I got rid of Eli Lilly. I think I need to go back and check my public portfolio, but I wasn't super happy about that and what that could do for stocks like Eli Lilly. But I don't really see that impacting surgical devices, right? Drug makers, yeah, that will have an impact, because of how he may feel about certain medications and vaccines and things like that. Medical devices, I don't really see that being an issue. Perhaps I'm wrong, but I feel safer with medical devices than I do with medications and vaccines under that portion of the administration. That's just kind of how I'm viewing it, and I think that is a safer area to be, because again, you're still going to need those things the same way you're going to need toilet paper, tissue, things like that. People are still going to need surgery and, you know, the machines and things that go into, you know, ambulances. I guess that's the plural of ambuli. I guess I'm joking here. But all the medical equipment, we are still going to need all of that stuff. And my assumption here is that those typically don't fall under tariffs either, because again, these are things you absolutely need. I could be wrong there, but again, I'm throwing these out there for people to continue to research, and these are things I will continue to research too, because again, these are back of the pocket. Come back and research should we start to see inflation start to take off. So you want to have these at the ready in case we absolutely need them. And then you have the utility and energy space. So not just gas and oil and stuff like that, but it's also electric and water companies too. Not only do they typically pay a solid dividend, these are things that you absolutely need. You're starting to see a theme here outside of inflation bonds, outside of cash in a savings account. You're seeing the things that you are going to need regardless of what is happening. You can cut back on certain things. You can't cut back on water, right? You can't really cut back on fruits and vegetables, which you should be eating, okay? But you're going to have to go to the store to eat. You're going to need running water. You're going to need power and electricity. You are, whether, you know, gas-powered car or electric car, that is going to funnel to some stock, and you may want to consider investing in those stocks. Now, some energy stocks are still doing well right now, and we have a video on that, and you definitely want to check out that video right here.